Oh, cool. We got Nathan. I'm going to bring you on up right now. We got Rizzler as well. Cool. Let's bring you up. All right. What's going on, guys? Whoever wants to speak first, the floor is yours.
Can you hear me?
Yeah, what's going on, man? How's my audio coming? Okay?
Yeah, your audio is perfect.
Okay, cool. What's going on?
I'm just opening up my trade of 8 graph here so that when we're talking about this, I can watch. So I'm sorry, bear with me. I was in a little bit late here. Just logging in here. Give me 1 second.
Yep.
All right. My big question or biggest question right now, 2 biggest questions are,
sure.
Do you have a hierarchy for the draws on liquidity? Like what, as far as what would you consider to be the strong, like at the top of the list for draws on liquidity? And is there like a hierarchy or a list? Like is a fair value gap a stronger draw on liquidity than just an imbalance, or is like let me think of like a liquidity, like a area of liquidity over an old high can sometimes be a draw on liquidity. We have all these different draws on liquidity we talk about.
Right. Yeah, that's it, man. It's the concept of liquidity. If you're looking for where that would be on your chart, it's swing highs, swing lows. So I guess, it wouldn't be like a volume imbalance or a fair value gap. Those are a little bit different. So the draw on liquidity is essentially a swing high or low. The hierarchy, I guess I would, group them into is I always go in descending time order. So ultimately, to me, I'm identifying them on the weekly time frame, down to the daily, down to the hourly, and so on. And then you get some smaller time frame swing highs and lows as well. But the higher time frame liquidity to me is the ultimate, I guess, driver or driving force as to where I think price is going to go. And that kind of sets me on sides so that, I know a lot of people say, oh, you don't want to have a bias. You just want to play the chart in front of you. But, creating some sort of bias that, again, it makes sense. You've back tested it. You've seen that it works, all the above, yada, yada, yada. But those little things can play a huge impact as to, not only how you're going to execute trades, but let's say you're in a trade and what the higher time frame draw on liquidity is. You might give it a couple extra candles to actually do its thing versus, oh, okay, I'm up $100 here, I'm going to take it, and then you get out of it, and then it goes right to where you want it to go, and you're all upset, and then you probably jump back in just trying to take another trade just to say you took another trade, and then when that one backfires, now your mentality is completely shot. So, but yeah, to answer your question, I guess in short, the term liquidity and just how it can be identified is just swing highs and lows, and the stronger coming from the higher time frame rather than the lower.
Okay, that answers it for the most part. I'm just looking at the chart here. I'm like looking at NQ right now.
Yeah.
And so the last down leg, I'm looking at the daily. I'm looking at the last down leg from October 17th down to that low that you called out on the infamous October 27th low there that you called out.
Yep.
So while we were going down there, the draw on liquidity was what? Like that?
Yeah.
I'm not seeing it on the chart. I see a big gap back in like May.
Sure.
May 23rd. Is that gap? Was that the draw on liquidity? And was the top hitting the top of that gap and bouncing tells me what? Like we didn't close that gap.
Right. You don't need to close gaps. I think that's one of the most overused, just like Twitter furu thing. Like, listen, you don't need to close gaps. Go back on any chart. I don't care what it is. I guarantee you're going to find an empty gap in there somewhere, or where we just wick right into a specific point of the gap without completely filling it. I think it's just a fallacy overall. And but no, in your specific example that you're bringing up, if you scroll over to that gap that we had back I guess it was May. I forget off the top of my head. But if you go back to that May, you see that we gap up on the futures chart, which is NASDAQ NQ. And you'll notice that there is a low wick inside that gap. Yeah, the gap didn't completely fill, but did you see the low of that day? And that was really the start of that big run that we had this year, or into the summer, I should say. So taking out that higher time frame liquidity while also being in discount of an overall yearly bullish range, that was to me just a recipe for reversal. And that's the difference. So when I'm identifying intraday, and if anybody has watched the video that I have on YouTube of my trading model and how I go about it, you'll notice that I am looking for liquidity to be swept prior to a retracement down back into discount, specifically a discount imbalance. And from that imbalance, I look to play it back up towards the high, or if it's a bearish market structure, I'll look to play it towards the low. Now, the only caveat to that trading model is when we take out a higher time frame level of liquidity. So, for example, just because we have a high, let's say it's 11:35, we made a high, and then we make one more high at 11:50, which is the high that's going to paint. It's the higher time frame high, right? So that's why at the end of each day, I'll go in manually, and on my 5-minute chart, the one that I trade off of, I'll identify those hour swing highs and lows. So that way I know that when we breach that hourly high or low, might not be the best time for me to look for that retracement into a bounce back up towards the high. Oftentimes those higher time frame levels are going to give you reversals at that point. So that's why I try and I have to identify, and I color code it. So any normal high that you'd get on the 5-minute, I'm throwing a blue little horizontal ray on it. And then when I get it, over to the hourly time frame, I'll paint that a different color. It's like a, pinkish red color. That way I know, because ultimately, if my model was to work every single time, right, the market would just go in one direction. And we all know that's not the case. So the way that I've learned, of course, through trial and error, it takes time to identify little key ins and outs of specific things. But I've noticed that with higher time frame liquidity, more orders, more money, when those are breached and those stops are taken out, oftentimes that will lead to those reversals rather than just the retracement into the next level up. So that's been a total game changer for me, and really, ultimately, being able to incorporate higher time frame levels into my ultimately shorter time dated trades, it has been a slam dunk. So I know people who are trading, if you trade anything like me, you might say to yourself, why the hell would I ever care about a weekly level or a monthly or even a daily level for that matter? And my answer is, when we do approach them, go back in your charts and check them out. See how price reacts to that. And it's amazing because typically those are the ones that are going to create the reversals, and it's not going to be that clean golden pocket retracement into that next level up or down. So did that help at all?
Yeah, that answered a couple of questions actually. I just have like maybe one or two more quick questions. The other one was about the turtle soup.
Yeah.
So I have this issue because I'm a primarily bearish trader and I'm working on my bullish trades a lot. Like that's what I've been focusing on. But when I trade bearish, like I'm oftentimes waiting for those breaks at previous lows.
Right.
And as I was trained as a momentum trader, so like if I'm watching the 1 minute and I get a break of like a 15-minute low on the 1 minute,
right,
and the candle just drops kind of real hard, and then it'll retrace up, and it can't get up past the bottom of that 15-minute candle. That's usually an entry point for me to go short, and I get ripped on the turtle soups. Like when it turtle soups and rips against me, it kicks my ass. So and I realize that the first trade I described there is not an ICT trade, and it's not a trade that you'd take. But I'm just trying to get some help with those because I like that trade and it works great. It works great for me. Like if the 1 minute candle can't retrace at least 50% of that first big red candle, That next candle I'll try to retrace, and if it can't retrace 50% of it within 30 seconds, I know we're going down further. So I'll
Right.
enter a lot of times there, and it does work, but it doesn't, but it only works for a scalp. I take scalps now because of the turtle soups that happen, and I can't determine when it's going to turtle soup and when it's just going to dump.
Right. Yeah. So that's the concept of liquidity again, and the way that I've kind of learned to avoid getting caught in that situation where, you know, I'm just going to go back really quick and explain one thing that I've noticed from the couple years that I've been on Twitter. Back in 2020, there would literally be people who had in their bio of their Twitter account, breakout trader, right? You don't see that anymore, right? Because think about it. Think back in 2020, 2021. What was a common occurrence?
Well,
We
yeah,
would just
we had a huge bullish
continuously rip
trend,
up.
and yeah,
Right,
yep,
exactly. Boom, right there, bullish trend, right?
yeah.
So think
And it would
about it
make double
now.
tops and then just rip through the double tops like all day long. It would just
Right. So
run up, but you
exactly.
get a big
So
run up in the morning, double top, and then rip through it again right after lunch.
right. So that's exactly where I'm going with this. So ready? You said it right perfectly. Bullish trend, right? So you have a bullish trend. Okay. So if we have a bullish trend on a higher time frame, right? Whether you're looking at an hourly, whether you're looking at a daily, whether you're looking at weekly, whatever it might be, if we're still bullish, which if you go onto NASDAQ's chart, you'll notice that we, despite that epic meltdown from July until the end of October, um, the overall yearly trend is still bullish, right?
Yeah,
So the
technically.
fact that we are in that bullish trend, that's why I try to avoid fading that versus, I would be looking for that sweep of the low for the reversal higher rather than looking to play it to the downside and look to short it. And this goes back also to, just overall bias again on the daily chart, and this has been going on for weeks now. I've had a bullish mindset because I figured, okay, my initial draw was, I forget the exact number. It's like 14,979, I think it was. And if you search at Mando Trading with that number in there, it should pop up. But that was the initial place that I was looking. And that particular spot was a retracement into a bearish trend because at that point, we had a very smaller time frame bearish trend going on. So then after we broke through that, I posted on there that I was neutral at that point. I really was unsure because look, we are getting into the ideal area to short. Now, if you shorted that and you weren't quick on your stop loss, then you're in some trouble, right? But at least it gives you somewhat of a criteria as, okay, look, if we were to get above this imbalance that, typically I would be looking for a rejection there. The reason why I wasn't looking for it in particular at that specific instance was because we took out that higher time frame low on NASDAQ that we talked about earlier, right? So then as we proceed on, once we swept that high, and again, I wish I had the number. I think it was like 15,400 something. Once we swept that, to me, that is a bullish market
68.
structure shift. Yep. So it was 15,468, right?
Yep.
Yep. So once we swept that, to me, market structure has now shifted bullish. Okay. So when I'm looking for that retracement back down, right, I would be looking in discount for a long. The difference here is we obviously haven't retraced at all. So until we satisfy whatever the higher time frame liquidity is, I think our first one was
Oh shit!
you there? You hear me?
Are you kidding me?
Uh-oh. Yeah, but anyways, so we're looking at these higher time frame highs, and those are my draws on liquidity. So for every time, and if you can go back and back test this as well, looking at Nasdaq, for every time that we've taken out one of those higher time frame highs, we've got above it, had it, not even a full candle is painted. We've just gotten a little retest on, whatever the next day or 2 days after. We've gotten a low wick back to that level of liquidity or previous level of liquidity, and since gone higher and looked for the next level of liquidity to the upside. So to me, like I tweeted it the other, maybe like a week ago, I guess, but just like understanding the draw on liquidity, to me, it just makes trading so much more fun because then it doesn't become a matter of, oh, I need to, I don't know if I'm bullish or bearish, but it becomes okay, I need to execute. And then when you just have to focus on execution rather than worry about direction as well, I think that's a home run when you kind of put it all together and actually understand that, you have a good idea where we're going. So now pair that with, okay, I know I have a good feeling of where we're going. Could you be wrong? Absolutely, you could be wrong. But if you're using the concepts of imbalances and discount or anything like that, you're going to have a clear-cut, well-defined stop loss from where, the trade may or may not work out. That's just the bottom line. It's right there on the chart for you. And that's why, and that's been something that gave me, I guess you could say, another layer of confidence, because prior to entry into any of these trades that I take at all, I know exactly how much money I'm going to lose if it goes against me, and I'm okay with that. So, it is what it is. Look, everybody's going to be wrong, but just understanding where price actually might not come back from, that's a huge plus. So, Nathan, I know you dropped out, but I hope that answered a question of yours. And I want to pop on over to the Rizzler. What's going on, man? I see you. You've been up here a while. Sorry for keeping you waiting there, but
Hey, what's up, Mondo? Nice meeting you, by the way.
absolutely, man.
No, I was just listening to you guys' chat and stuff. I was looking over your Oxy call out that you had earlier and stuff. So I
Yep.
was looking at crude oil because I trade futures mainly.
Nice. I got CL. I got that chart coming out tomorrow. I kind of just scheduled them all over the weekend, and I'm gonna have them roll. I haven't traded CL at all. Really, the only futures that I've traded at this point are Nasdaq and the S&P. But yeah, I mean, the way that I look at this energy situation right now really is like, this is either going to be a very, very quick stop out, or it's going to be the best possible long you're going to have based on the range that we have. So, I'm always kind of looking for the best risk reward in terms of where we are at in a specific range. And that's really the model that I use even on, if I'm scalping. It's all the same to me. But yeah, no, I'm willing. I've been in Oxy for quite a while now. Chevron as well. I'm like pretty much flat on my long-term positioning there. So, I'm not too happy about that. But just commons in a Roth IRA that I don't really.
Yeah, I saw that Buffett exited his Oxy position as well. I was in Oxy about 3 weeks ago, so I made some good money off the run up from that a while back. So I'm
Nice.
expecting seasonality to pick up. And then if you look at CL on the hourly, it looks like it's completed a cup and handle on the 1 hour. So, that long might just work out well for you, brother.
Yeah, no, man, that's the thing. Like, and it's always tough when you have, I guess, conventional data and knowledge of what had previously happened with a specific sector at a specific time of the year. And I'm almost in the camp where, like, low key, since COVID happened, I think everything is still all out of whack, man. I don't want to say it for certain. I'm sure you can find instances where seasonality plays out like it usually does, and I think there's also examples of where it hasn't really. It's ironic that, now obviously with the quote unquote Santa Claus rally coming and everything like that everybody's expecting um, higher prices and everything like that. But I got to be honest, even, this is not talking about the energy trade in particular, but just looking at NASDAQ, I still truly believe that draw on liquidity. I think it's 16,240 something. You can back check that for me, but that's that daily swing high from, oh geez, I think it was summer. Yeah, it was July. So that daily swing high to me is still the draw. Now, can we stall out a little bit prior to reaching there? Yes. When we get there, what's next? At that point, I would be incredibly shocked if there isn't some sort of pullback. And again, it's not necessarily the market's going to crash right now. I'm not saying that. I'm just saying from this idea that the range that we've painted since that low that we called out on, I don't know, it was the end of October. From that low to where we are right now, we're got to be close to about 2,000 points. So any sort of retracement back into discount, again, the trade and the idea that I like to take, whether that's on a 5-minute time frame, whether that's swinging common shares or anything like that, is to wait for price to get into discount of a range. And what discount of the range is in a bullish range, it's going to be below that 50%. And in a bearish range, it's going to be above that 50%. Think about it. Does anybody ever want to overpay for something? No, right? You want something at a discount. So if, quote unquote, fair value of something is just about in the middle of a specific range, below it would be your discount for your long. And then on the flip side of that, if you're in a bearish trend and you're over 50%, that means that if you were to take puts there and you're targeting the low of that range, you're gonna be looking for more than a 50% reward while risking less than 50%. So that's the way I always try and break it down, and that way, trying to figure out what makes the most sense. But going back to NASDAQ, if we're to get up to that 16,200, I don't know if it's 40 or 50. I'm trying to think off the top of my head, but somewhere up there. And if we are to sweep that high, and to me that would be a pretty logical place for a retracement. That retracement can be like 1,000, 1,200, 1,400 points. The range is huge, so if we're looking to get something in discount, it's going to be much lower. So, despite us being in a, quote unquote bullish range, that down move can be pretty serious. And I'm sure it could totally hurt a lot of people. Now, that also goes into the long-term or longer term, I guess you could say, idea of like what's happening next with the market. And, this year to me, I think we're going to finish inside on the year. So that means we didn't break last year's high or low. And then heading into next year, I've actually been joking around about it and saying that we're going to have another inside year. And the reason why I'm kind of joking about that is because obviously everything in terms of the economy, in terms of the wars that are going on across the world, it doesn't sound great, right? But unless there's something crazy that's about to go down next year in the election year, I really don't anticipate the market shitting the bed and doing anything absurd. So I'm just thinking, does the can just continuously get kicked down, kicked down the road here, and we kind of continue on business as usual, maybe even in a tighter range? Who knows? But again, really the idea here would be that any type of retracement that we can maybe get it could be a serious one. And that's not even necessarily saying, oh, the crash, market's crashing, this, that. I'm not even saying that. So, yeah.
Yeah, you're right on that. As far as the pullback, I mean, 200 point pullback doesn't mean the market's crashing, especially with as far up as we are now. And now we're really in price discovery mode, being above 16,000 on NASDAQ.
Yep.
So that creates a whole different scenario that even less experienced and new traders in the market may not even really understand quite yet, is that these levels here, and what appears to be happening is that the price is being accepted. We're establishing, levels here at this. So we're not necessarily rejecting and retracing back. So, that also kind of, fills in the blank with what you were saying, is that, the market's accepting these levels for the time being. So, being bearish, really got to be careful because you're going counter trend for the time being.
Right. And and I know you're aware of this as well. I'm, just for everyone else. And I think Nathan kind of asked a question about this a little while ago, but I'm not, we're not trying to say that you can't make money on a put during an uptrend. I'm not saying that by any means. And I know, Rizzler, you're not saying that either. It's just when it comes to, looking for maybe that extra leg down, I might just be a softie and I need that extra layer of confirmation to actually prove to me that we are shifting market structure back into the bearish territory. But I really don't look for all that much when I'm shorting in what would be a bullish range. And I actually have I made a video going over, every Saturday I do those longer short quizzes. And in that video tomorrow, it's going to come out. I said, at what point do we know there's a range established? And to me, it's when we get some sort of imbalance to the downside, right? So, ironically, if you go back, I think it was 2 days ago, maybe it was Thursday, I think. Yeah. So on Thursday, we actually had a gap down open on futures. Now, if you go back and you look how we finished that day. Just barely green to prevent that gap from holding as an imbalance to the downside. Obviously, Friday was a little sloppy, but and we didn't do all that much, but it's just really interesting to see that, to me, this range really isn't set. And I haven't gotten any indication that it is set just yet. At that 16,200 level, that's when I'll start to reconsider. But until then, I think we're only about 400 points from there. So we're really not all that far off. So, but yeah, I mean, those typically tend to be great shorts too. Like, again, shorting in a bullish trend, it might sound crazy, but look, if you get an imbalance to the downside and that sets the range, where would you be looking for price to revisit? For me specifically, I'm looking for an imbalance down there in discount. So, that could be 50 points. Who knows? Whatever, depending on the size of the range. I mean, that could be a decent gain right there. And look, even if I want to be safe and only take 20 points of that, I'll take 20 points. You're trading a NASDAQ contract. That's, $400 right there. I'm fine with that. I guess counter, but yeah, no, I'm still on the side. I think that the amount that's left in the tank here is a little bit more limited than, the last time I hopped on Spaces. Yeah, I mean, even SPY is pretty close. I know I don't talk much about, the ETFs as much, but I posted a chart yesterday on SPY, and to me, it just looks like we're begging to sweep that high from this year. Does it happen? Maybe, maybe not. But we are pretty damn close. So I don't think we're going to get those all-time highs that a lot of people are talking about here on Twitter, because I don't think we have enough time anyway. So, but yeah, no, thanks for popping up, man. I appreciate that. Anybody else have any questions or anything like that? Feel free to grab a mic. I'm going to go through the comments right now and see what we got. 2020, buy calls Monday, sleep till Friday, sell for multiple 100%. Yeah, absolutely. I know that was, so, I mean, it really was a dirty time, I guess you could say. I mean, obviously with the inflow and fake money and all of that, just absolutely rocketing the market. But, think about how many false expectations that created on so many people. I mean, people who were just kind of getting into, the market at that time. I mean, I really wasn't trading at a high clip prior to that. I was still in school and really didn't have much money anyways. So, but I'd been there and I've seen how much slower and how much longer it took moves to actually play out prior to 2020. And now it feels like, the market's on steroids in either direction, really. It's just the speed that we have now it's still pretty incredible. Let's see, I got another comment here. KD reporting. Oh, KD, you want to pop up? I'll invite you up to speak. Kevin, actually, he was on that energy move last week in the Spaces call. He was talking about it. Yeah, I mean, going back to that, and just really any trade that I'm taking for that matter, I would rather be stopped out in minutes than try and buy something in the middle of the range and have to sit through potentially 20% of the range drawdown. I would much rather get that as low as I possibly can, somewhere discount, and then from there, not only is your reward going to be higher, but your stop out, it's going to be such a smaller percentage than what it would be if you were to buy it. You're just dealing with like a 50% of the range or something like that. But what's up, KD? How you doing, man?
Yo, what's up, man? I actually got home. We actually went out. We're celebrating somebody's birthday. We went out to an Italian restaurant. But yeah,
Nice.
nah, dude. Of course. I mean, it's really funny. I actually heard from somebody else that there was quite a people chirping, that energy looked so poor, and energy is gonna fall off a cliff and become non-existent. I'm like, that's when I was like, let me pull this up, and that's when we started talking about it. Last week. It's funny.
Yeah, I was wrong last week I tweeted about it, and again, my crude chart is going to be shared tomorrow, so you'll be able to see what I had said the week prior. That's why I like to post ideas, because I can go back to them whether they're right or wrong, and it's not just one of these gurus on Twitter who said that they were right and just have no evidence or any backing behind their claim. But I thought the low that we took out last week was going to be enough to get us going. It ended up bouncing a couple points, but ultimately ended down. And then on Friday, obviously yesterday was a big day for oil, and that was after sweeping an additional high. So we are in discount. And I like the way that you kind of put it was, again, if you're looking at like what the risk reward on the trade would possibly be, it's just, it's completely outweighing what the
Yeah, I mean,
downside risk would have been.
yeah, I texted because I texted Ryan about it. I was like, "Yo, am I looking at this correctly?" Like, I mean, it's essentially like a 10-to-1 trade was the
Mm-hmm.
risk reward. So, like, you know, on like if you're looking at oil futures, you were risking like $465 to make like 5,000 a contract. Is essentially what the range was looking like.
Yeah, no, that's the thing. I know we had talked about this previously, and actually, it kind of lines up with like the whole idea that I had on Tesla, but um, specifically, hold on, I'm just trying to make this left real quick. All right, but with Tesla being where we are, everybody in the planet is screaming short, 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 short. Turns out that we were perfectly into discount of the bullish range from the year, and a lot of the times, more often than not, best time something that down closed candle or the red candle, and then on the inverse side, the best time to get your puts is on green candles to the upside. You're squeaking out a couple extra points, and you're getting as close to what the top or bottom would have possibly been. And I know it's scary, but if you have that model that you trust and something that you've back tested, that you've practiced, and you've seen, the situation shake out over and over again, you'll notice that a lot of the times you're going to start up like $80 to $100 on the NASDAQ contract, because you had the confidence to buy on a red candle, and that's before the move really even starts. But
Yeah, I mean, like I just texted you guys. I texted you guys too, as well as like, the best way that oil can finish would be if we created that bullish order block. And I don't know if you saw my text message I sent you guys about like 2 hours ago, but I was like, funny enough, man, oil's bouncing back, making that bullish order block, and we're probably not going to sweep that low on like that, that June low that we made this year, the three relative equal lows we made, unless we get some type of rejection at that premium range on the candle that we formed.
yeah, I also noticed I got gas yesterday, and it was like 3.39. I'm like, that is way too cheap for New York. There's no way this is sticking around for long.
yeah,
So
yeah, they're gonna.
yeah, I'm just waiting for it to explode.
Yeah, well, yeah. I mean, Jersey, man. There's a few places now where you can get like gas for $2.98. So
Yeah, exactly. I mean, and Jersey used to be cheaper. I remember when I was younger, we would go across state lines and fill
yeah,
up the tank. They'd pump it, it'd be cheap as dirt, and head on back. Um, but yeah, I mean that's the energy idea. Another one that I looked at, it's obviously late at this point, but I tweeted about it last week, was Banks, and Banks had a killer week, man.
yeah,
And I had actually, not an argument, but like I had a disagreement with somebody who was looking short on Banks, and we both ultimately, and this is a great thing when you can have some sort of disagreement, and not hate each other. I know it's 2023 and we're supposed to do that when we don't agree on things, but we just disagreed, and it was fine. My thought process behind it was we actually, on specific names, not so much on XLF. I actually just charted a few individual names, so Bank of America being one and JPM the other, and it was interesting after taking out that higher time frame low. And if you were to go on like a daily chart right now and you wanted to follow along, you would notice that we took out a higher time frame low while being in discount of the ultimately bullish range. And but the ironic thing was that we actually created bullish breakers on both of them. JPM is like long gone. JPM is almost up to the high of the range already, but Bank of America is a little bit behind. I know it's a crap name to trade and everything like that, but it is pretty cheap for contracts on that sucker. So, but yeah, I mean, what happens next? I guess we're gonna find out. I know you brought up Citi. What did you what conclusion did you come from the that Citibank thing?
Yeah. So should I reference it the first time it was mentioned, or?
Yeah, well, yeah. So Katie actually texted us this like a month ago about Citibank being defunct, and then he just sent us a message today. I actually didn't even get around to that article, so if you could share, that would be great.
Yeah. Let me. I stole it from Gurgavin. I think I initially saw it from today. But about a month ago, I texted everybody as a joke, more or less. But Citibank has always kind of been in some troubles. So if everyone's familiar, they used to be Citibank, and then in '08 they were kind of defunking in '08, and they did a merger with Travelers Group, and they became Citigroup.
Mm,
And that's how they kind of escaped not collapsing in 2008. And if you can imagine that they probably weren't doing all that great. Then I was trying to think of like all the credit problems that people are having now, and kind of applying that to some of the bigger banks. Of all the bigger banks, so so to kind of put this on everybody else is uh, I went back and forth with somebody. They were like, "No, Citibank is a regional bank," and I'm like, "I don't think so." And I always remember Citibank, merging, becoming one of the big five banks, as Mando was mentioned, with J.P. Morgan, Goldman Sachs, Morgan Stanley, Bank of America, and then of those five, Citigroup is, my personal opinion, the shittiest of those five big banks. Um, and, they always have that saying too. There's a saying, if you're paying for advertisement, that if your name's on the side of a building or a stadium, that you're probably paying
yeah,
too much, and you're probably not as liquid. But yeah, no, I mean, so the article says that Citibank is starting to its first round in a plan to do mass layoffs. The plan, once fully executed, will lay off tens of thousands of employees, and it's projected that you'll see probably 12,000 people lose their job on Monday, come Monday morning.
jeez. Yeah, I remember when this all went down because 2007 was the last year of Shea Stadium, which is where the Mets played, and then in '08, or no, I'm sorry, it was '08. '09 was the first year of Citi Field. And like almost immediately after all this crap came out about Citibank, and everybody was, I remember listening to the radio, like sports talk radio, and everybody was complaining, oh, they can't even keep their doors open, and they got their name on the stadium, like what's going to happen, what are they going to name it, blah blah blah, all that stuff. So, but it's also ironic if you look at the timeline, what happened in '08, '09. I mean, so this stuff is circulating again. um
Well, yeah. So, if you may, I'll expand a little bit on that.
yeah, go ahead.
So in 2008, I think it was. So you had the March layoff, so 315, in 2008, you had a bank collapse, and then in September 15th of 2008, you had Lehman Brothers was September, and that's kind of where I was like expecting with the middle of October. I was expecting something to happen with one of these banks, not necessarily to fall in line with '08 and stuff, but a lot of these banks are struggling. And I was expecting, maybe around that time we would hear something, which is when I sent a text message to them. I said, as a joke, Powell's going to come out when he was talking on October 25th, that Powell's going to come out and announce that Citigroup is now officially one of the banks that's going to go under, just because how poorly they've been doing. I mean, I think if you look at the chart on Citigroup, and I'm assuming that you haven't, Mando. It's fine.
No,
But
no.
no, dude, they I think they're below. I think they're below 2008 prices right now. I did double check real quick. They're not doing good. Yeah. So let's see. 2008. No, okay. So they're not below 2008, but they are. So yeah. So right now they are trading at or below 2003 prices. So it's like 20 years of being underwater as far as, yeah. So they can't catch a
Oh,
break.
KD,
Yep.
Captain Jim Burke said in the comments, the merger between Citigroup and Travelers was in 1998.
Oh wow. Okay. Yeah. Okay. Wow.
Yeah, I mean, I don't know. Look,
Yeah.
as anybody who's traded with me or been in the group or anything like that, my feeling on a lot of this news and how I truly, truly do not believe that it is relevant whatsoever in the short term for my trading decisions. I think a lot of it is eyewash or FUD, and I think it's really just like the psychological game that a lot of these people play on retail traders. Think about it. CNBC. Every time we are about to reverse, every time CNBC they come out with some sort of article that it's doomsday and everything's gonna crash and everybody's all out of this and that, and then magically everything turns around. It's just amazing.
Well,
So
yeah.
I don't
Yeah.
believe in any of that crap,
No, dude.
at least for my short-term decisions.
Yeah. No, I mean, I told you guys, you and Ryan, is like, last time I bought Target before this previous earnings, I bought Target the day that I woke up and flicked on Wall Street Journal and saw Wall Street Journal said, headline news, will Target stock ever, recover from its LGBTQ, whatever deal? And I was like, oh, this is total FUD. I'm, buying the hell out of this. So I bought some shares at like 125, sold on a decent rip to 130s, high 130s, and then as soon as it broke those 118 relative equal lows that Target had from a while ago, that's when I started DCAing back into it, and then
Nice.
yeah. So I've been playing that one, but yeah, I mean, dude, exactly. It's like, every time these news comes out, they're always calling the one side of the trade, and everyone's gonna rush. Think about if you're on a boat. What happens when everyone rushes to one side? The other side, becomes much more appealing because the other side, starts pendulum swinging up. So I mean, that's the one thing I've always really liked about our group, is like we're all really trying to fade the narrative.
Yeah, and that kind of goes back to just the point that I was trying to making, where it doesn't always feel like the best idea, buying long off a red candle or something. But look, if it lines up with one of the imbalances that you have, or we're in discount of a range and overall the range is bullish, uh, the way that I look at it is just, okay, this is going to be the quickest stop out of my life, or I'm going to eat up every last point that I could potentially take in this range. And that's why, like, I talk in the group about just my model in itself, and just showing the, I guess, the precision on how often this actually occurs, where we do get deep into discount and almost shake everybody out prior to reversing and moving back higher to the upper end of the zone. And you'll see tomorrow. Tomorrow, I know Amazon completed the move, Microsoft completed the move. Tesla and Google are still lagging just a hair in comparison to a lot of the other names. Apple is I think Apple's about $10 away from completing the move. So, it's just amazing. And this is why I urge a lot of people to, it's cliche and corny. I get it. But like journaling, just not only your emotions and, what you went through on a specific trading day and everything like that, but also just you can journal sentiment too. And I recall this perfectly, that when we were at the lows at like 14,100, I think the exact low was, there was not one bull in sight. The entirety of Twitter was calling this is the end and all of this stuff. And then look how quickly that sentiment can change, really. And this really was a fast move. I mean, this took 2 weeks and we're up almost 2,000 points. It is amazing how the psychological aspect of things can really stain people's brains in a way, and kind of keep them always looking at the side that they believe is true, just because of all the, as you could say, brainwash that they've seen, whether it's on TV, whether it's all over Twitter and whatnot. But I personally like it because I like to see all the macro people, and I know we got some macro people. Sorry in advance, but I love to see them all freak out and scream about certain moves that occur. Because they're dancing on everybody's grave when there's one red candle. So it's just funny how to you can kind of see that I guess transition from, oh my God, the world is ending, to now people talking about all-time highs. I think we're getting a little ahead of ourselves, but I don't know, just a funny little assessment there, But what else? What do we got? I'm looking in the comments right now. I just saw one more comment had popped up.
But yeah, I mean, think about that the boat and the pendulum. When people start swinging to one side. I mean, we can go back. There's many times that you and I've been together, and we've seen this happen where people just swing all to one side, and the other side of the trade just makes so much more sense. And I mean, look at that October. What was it? October 2022 when we were buying Tesla at like $100 a share. AMD at like $50 a share. We were like, basically, we were basically like, I felt like I was stealing shares from people, because I mean, and that's the nice part is like, the more cycles you go through, the more the more you see it, the more comfortable you feel at buying. Like, the more comfortable you feel buying when people are like, oh my God, we're gonna see 100 points lower. Tesla's market cap's gonna drop under $250 billion. And it's like, okay, dude,
Yeah, I remember
um,
I got tweets saved, man. I got people saying Tesla's going to $60, which is hilarious. Yo, I can't
yeah,
wait. 10 minutes. In 10 minutes, I have my Palantir tweet scheduled. You got to see this. It's crazy.
yeah,
You're gonna look at that percentage, and that's how I felt. It feels like you stole somebody's shares because
yeah,
of where we're at
yeah,
now, and it is funny. And look, the way that we're talking right now, I don't want this to be, yo, chill out, man.
yeah,
Sorry if you heard that honk.
yeah,
If you we're not just saying, oh, just because everybody's bullish, then you buy puts and vice versa. There's got to be some sort of backing to the argument. This goes back to I flipped out about something probably about two, or maybe it was a week. No, yeah, about a week ago, and the Discord chat, man, everybody, oh, we're overextended. We're overextended. What does that mean? What does it mean? We just went up a lot in a short amount of time. We got to come down. Is that a viable trading strategy? No,
if
and I'm
if
not
you
disagree, and
if
I'm
you
not saying that in a way to disagree with somebody. Like you could be totally right, I could be totally wrong. But if you're saying overextended as a viable way to, I guess, create some sort of thesis, you're out of your mind. Look how overextended we
Yeah.
are right now. Quote unquote overextended. Come on, we're up 1,800 points in 2 weeks. That's not a viable, reasoning as to why we should go down. Doesn't make sense.
Yeah.
There's got to be something to it. There's got to be fabric to it.
Yeah, I mean, you gotta quantify it and then provide a justified reason, outside of a news headline, outside of an arbitrary, oh, it feels this way. Well, guess what? Really, I mean, unfortunately, the market really doesn't care how you feel.
Nope.
Like, there's the age old saying that the market will be more irrational for longer than you will stay liquid, and you just have to you have to realize that you know yeah, there's just the market loves to take out and seek out resting liquidity, and if you can't see that now, then you just have to do some more digging on your charts.
No, I completely agree. I completely agree. I mean, do you really think that the market should be where it is right now? Truly, do you really think the market should be where it is right now? With everything that's going on economically, with the two wars that are going on the other side of the world? Absolutely not. But guess what? It is. So deal with it. You got to deal with it. And that's why, to me, I think all of that excess is just noise. Um, Everything else that comes in, oh, this data, to me, all that is just giving is a little bit of gasoline, and that's about it. Price is going to go where it's predetermined to go to, and I know that might ruffle some feathers. I think a lot of people still think this stuff is random, but if you genuinely, and I'm not just saying this because it's me, but if you genuinely follow and watch the charts that I'm posting, and you can still in good faith say that price action is random, you I I mean, I don't want to say anything crazy, but you're kind of crazy. It's so precise and it's so perfect. There is no possible way that this stuff is random. There just ain't no way. And that sparked a
Yeah.
conversation for a different time on why I think reading prices above all else, and talking about all these indicators and stuff. But that's for another time. I'm not going to go down that route today.
I mean, there's two ways you can approach it too. I mean, like, I joke all the time that Mando's a perma bull, but it's entirely it's entirely for just a joke and just for poking
No, it's
fun.
because I'm
But
fading somebody in the group all the time.
yeah, nah, no, I'm messing with you, bro. But no, I mean, dude, like you can say like, oh, the S&P 500 shouldn't be where it's at because X Y Z. The two wars, economic, interest rate, credit card default, all the reasons that entirely make sense, right? But like, there's two things: you can either be upset about it, or you can just make money. And so that's entirely your choice. If you want to be upset about it, be upset about it, right? But realize that your pocketbook, your future, your family, your income, your grandkids, they'll all suffer because you're upset. You don't have to be upset. Trust me, there's a lot more things in the world that we have to take our minds, that take time away from a lot of things. Our focus, has to be positioned in a certain way. And it's like, focus on making money, making the life that you want, then be upset, I guess. But don't be upset just because the market's running and you're not a part of it. Make money
Yeah.
while the market's doing its thing.
Yeah, and I mean this in I guess the most respectful way possible to anybody who might be nearing retirement or cashing out on your 401ks or something like that. But in all honesty, from my POV, like I really don't care if the market goes up or down. I don't care if it crashes. Yes, I would totally feel bad for people in the circumstance where, or right around retirement time, things go down. But this thing is cyclical, and nothing that I say or do is going to change anything anyways. So really doesn't matter. But I really don't care. And that's why again, all of that outside external noise that I think is just completely out there and designed to, kind of force people into failure. Think about it. When the stock market's making its way onto nightly news, all of those people who have, I don't know, zero idea about anything that really goes on in this thing, and they're hearing, oh, the stock market's down X amount, and they're automatically thinking, oh, I got to get out, I got to get out, I got to get out, and it's like, that's it's a pretty tough move to make as someone who's just not really in understanding of how things actually work here. But it's almost done to me as like a plan, almost like, all right, let's shake these people out, and then when we do so, we will we'll take their shares and we'll run it back up. And that's the thing, people do this as for a living, like hedge funds, institutions, like they're preying on people. And again, going back to that subject that I don't want to talk about really too deeply today, but I think a lot of these retail concepts on indicators, RSI, MACD, whatever, all that stuff, I really think that was whoever came out with that stuff. I feel like they were taking a check under the table from somebody at one of these big institutions to take retail money, and and people try and like justify it that it always works. I don't know. I could never just come to grips that I'm going to place a substantial amount of money on a trade using a line that moves all day. It doesn't make much sense to me at all. But I don't know.
No,
That's something that I've had a lot of arguments out over time.
dude, I entirely reciprocate and agree with you. Like, there's people that I'm around every day, and they're like, oh, you don't put money in the stock market. The stock market, is risky. The stock market, you lose money. The stock market, this. I'm like, bro, you realize that, you know, of the millionaires that we have, 7% of them are inherited millionaires. 1%
Totally.
is, people coming getting it from other ways. 80% or more, or whatever, of the statistic that I was reading the other day are self-made millionaires. They were talking about 8 ways to become a millionaire. 6 of them were investing in some type of way. If you don't invest and you just put your money in a savings account, I mean, I really do wish you the best, because, when inflation gets hard, and interest rates are not as high as they are now, it's really hard to, compound your money into something that will actually allow you to build towards retirement. And it's like, as just Mando said, like, the market is it's a filthy instrument for generating wealth, and use it to your advantage, because people are going to lie from you, people are going to steal from you, people are going to cheat from you, and these people that we trade with, trade against, whatever, we participate in their markets. We don't really move the markets, we just participate in their markets. They use it as a vehicle to make money. You can too.
Yeah, no, absolutely. And you brought up a good point, and this is actually something that I wanted to talk about, and I was hoping that someone would ask a question relatable to this. And again, if anybody has any question, I don't care if it's about trading, what you name it, feel free to pop up. Just grab a mic, I'll give it over to you. But what I wanted to kind of discuss, and you actually brought up a good point regarding this. And when you talk about the market or trading with someone who might not be as informed, they automatically say, oh, that's really risky that you're doing something like that, right? And that leads into almost you're kind of psyching yourself out if you were to buy that, what someone else is saying, and what by that I mean, like, agree with them in a sense. But also on the flip side, you're going to get to a point where you're doing this, and there might be some up and downs, and I'm sure there will be when you first get started, because that is something that happens to everyone, at least anybody that I know. You might run into some luck early, and you might get your butt kicked a little bit to bring you back down to earth. But the one thing that I think has helped me a lot. And this is something that I learned, from listening and studying the concepts from ICT, is that you almost want to keep it close to the vest, in a sense, where you're not going around and flaunting, oh, I'm a trader, I made this much money, this, that, the other thing, especially to people who, they might be your friends, but they might not want you to do better than them. I'm sure there's a lot of people in everybody's life that might not want you to be doing better than them, right? And I think that's fair thing to say. Maybe your family a little different, but even your family, they might want you to go a much more conventional route. Like mine specifically, they thought I was nuts, but you go down this road where you almost have external factors and people kind of trying to pull it down and downplay what you're doing, because there's a multitude of reasons behind it, but one being they don't like the idea that you can be, sitting at home on your computer, watching TV, living your life, doing whatever, pressing buttons and making money while they're waking up at 7 a.m., going into the office, working until 7 o'clock at night, and then coming home. They don't like that. And that to me is the type of energy that no one who's trying to do this really needs in their life. I'm kind of in the camp, and this has just kind of been me for my whole life. But I always give people the benefit of the doubt, and I try to uh, look look for the good in everybody and everything like that. But when you're getting that type of negativity and negative energy pumped into your head like that, it's probably the worst possible thing that you can do, because you're going to start second guessing yourself in terms of your own trading, the own work that you've put in. You've probably invested a ton of time into doing this and doing it at a high level. And, and then you hit one bump in the road, and maybe that extra, I don't know, couple people who are, clowning on you. Oh yeah, he thinks he's a trader, this, that. Yeah, just get a job, buddy. People say stupid things like that. And, you're doing something that not a lot of people do. So you kind of have to give yourself credit for that just right off the bat. This is not an easy thing to do by any means. And it will take a lot of time. It's going to take a lot of ups and downs. There's a lot of pressure, I guess you could say, that comes with it. But ultimately, it is something that can absolutely be done. It can be done at a high level, and you can get to a point where you're consistent at this. And then realistically, you look back on it. Yes, it did take time, but at the end of the day, who gets the last laugh? So that's why at least I try and, I didn't go around, when I first made this account, oh, I have a Twitter account and I have 30,000 followers. I don't tell anybody that. No, it's nobody's business. I need to focus on myself. I'm not worried about other people. And I know that's a societal thing now, that everybody automatically, you meet somebody for the first time. Oh, what do you do? I mean, I really just don't care at all. And I don't mean that in a jerkish way or anything like that. But if you're a nice guy or a girl, great. I like you. If not, I don't care about you. I really don't care what anybody does for work. And but it really is a societal thing that's kind of gone into people's heads. And with that, I think it's all that negative connotation of trading. And you'll notice even on Twitter, what posts get the most likes? Those bear porn, or the loss porn that people post when they lose $40,000. It's like, you're proud of that? I mean, that's mind-blowing. But again, people click on it and they get that little gratification, they get those likes, so they love it. But there is an aspect where people do not want you to be successful at this, because they view it as easy, but they do not know what goes on behind the scenes to actually get to a point where you can do this at a high level with precision consistently. The amount of hours, I mean, I wish I could have a timer and just really see how many hours I put into this thing, because I remember those late night calls with UKD. There's a few others as well, where we're just on here talking aimlessly about this crap, because it's something that we cared about, something that we wanted to do for the long term, and wanted something that was sustainable as an extra income source or something like that. It's not going to happen overnight. That being number one. And two, If you do not put in the work, then do you really expect it to happen? In anything in your life, if you don't put in work, do you really expect it to happen? It's to me, it's really not in the cards. And, I can I hate to say it, but after talking to some people, you can kind of tell right off the bat who can, make this work long term, and who's just not going to. And that's just based on work ethic overall. But sorry, that was a little bit of a rant, but
Nah,
that
dude,
it's the same stuff over and over again, bro.
nah,
Seriously, I hear
you
it,
hit the
same
nail on the
stuff.
head. No, you hit the nail on the head with that. Like I genuinely feel bad for people when I talk to them, and you kind of get that sense that like, hey, I want to do this career because I love it. I want to work until I'm 70 years old, and like, that's cool. Like, work until you're 70 years old, but there's a difference between working till you're 70 years old and not having to work until you're 70 years old. And that's the place that I'm sure Mando wants to be. I'm sure Ryan wants to be. I see Ryan in here. I see Captain Mara in here. I see everybody in here. I'm scrolling through the whole entire list here, and like, you know, when we talk about this, it's like we talk about this for love, and like we don't want people, that you're sitting here, you have to keep grinding until you're 55, 70 years old. You know, um, like, and it's kind of funny because like some of these people, you talk to them and they want to, keep working, and like, working is you're helping society, but do it because you want it, do it because you want your legacy to be a part of it, or you're helping, just because you care. Don't do it because you need it financially. And listen to this, man. I think I might have told you this, but if I haven't, it's just because we haven't spoken in a while.
Yeah.
There's somebody I work with, and I was showing them like, watch how much I'll make off of this trade. I'll close the trade and I'll show them, how much profit I just took. And they're like, you just made that in like 10 minutes? And I'm like, yeah. And then I'm like, I can also do, swing some overnight stuff and make a little bit more off of that. And they're almost so dumbfounded by it that they start hating on you for it. Like,
Big time. Big
and
time.
but listen to this. So they start hating on you for it, and they tell you like, oh, that's not possible. Oh, that doesn't make sense. Oh, you shouldn't be able to do that. You're not consistent with it. And then I'll be like, not consistent. You want to see my 1 month chart? You want to see my 3 months, my last 6 months? And then, you go into a work meeting and they're like, hey, we don't get paid enough salary. Let's go on like a worker strike for a contract or whatever. And I'm like, uh, we're not working enough, like, or we're not making enough. I'm like, okay, I agree with you. I'd love to make more money, but like, look what I do on the side. Look how much, money I make on the side is this. I can teach you to do the same thing that I do, but yet you make fun of me for it, like as if I'm some type of like person who's trying to teach you some type of voodoo stuff, or I don't mean that to offend somebody, but try to teach you something that's completely irrational and way out there. And it's funny, I didn't tell anybody this, but I just booked a date next year to go and guest speak to like a group of 40 people. And then there's another opportunity, later down. We'll talk to about 120 people. And it's just funny. It's like, I'm getting, hate from a few people that I work with. And like, yet I keep getting these guest speaker, offers. And I'm like, so am I the one doing something wrong? Or is it just these people, being too close minded?
No, I'm with you, man. There is definitely a sense that I get from even some friends that I've had since I was a young kid. They you could just tell that they're not very happy that you can stay at home, do it really kind of do whatever you want and make money while they're going through the grind of everything like that. So I don't know. To me, it's just not even worth talking about. I don't bring it up. If somebody brings it up, oh, it's going good. I try and keep it as brief as possible because, again, nobody needs any extra negative energy in their life when you're already doing something that's pretty difficult. So, Timmy, I'm trying to bring you up right now, man. I don't know. It might be because my service is pretty bad. I'm still driving, but it's saying that I let you up. But what else? What else we got? Does anybody have any questions? I know we're going on tangents here, but I mean, people are sticking around, so that must mean we're saying something all right, huh? Haven't gotten any questions in a minute here, but let's see. Yeah. Let me try it one more time, Tim. Oh, it says connecting now. Might be all right. You there, Timmy?
Yeah, I'm here. I was just
Maybe.
yeah,
What's up,
I
man?
was typing out my question. Hey, do you roll any of your P&L over into dividend stocks?
No, not as much. No, I'm on a mission right now. For a long time, obviously, with the student loan deferment and all of that stuff that was going on. I'm trying to get these done so ASAP, and then once I get them done, I'll do something like that. But I'm not trying to pay interest on these things forever.
Gotcha.
So I've been, yeah. No, over the summer I joked about it when we were trading in the group and everything. That my goal for I guess for the rest of the year was to get one of those new Mustangs. What are they called? The Dark Horse Edition.
Oh,
Because Mustangs, they're not making them after this year. So I love that car, man. Holy shit! I'm not even that big of a car guy, but I really love that car. And but then I think I woke up a little bit to it and avoided the Furu allure of getting a really sick unnecessary car. I have a car, it's fine. But I'm just kicking it right against the student loans, take those out, and then from there, that's when I'll really start to focus on building other things. But I'm just sick. Every week, or not week, I should say month. Every month when I pay these things off, and I just see the interest payment, and I'm like, this is criminal. I knew what I signed up for. I didn't know I was going to be signing up for damn interest rates up the ass.
Yeah.
Yo, so
like that's the biggest problem.
I was
Yeah,
watching.
what's up, Ken?
I was watching. I want to play. Let's play a game. I just came up with this. So I was watching a video. I think it was one of them TikToks. I don't know. I don't have TikTok. But this woman, she had her student loan debts. She's been paying back for 10 years. I won't tell you the interest rate, but she's been paying back for 10 years. Her initial balance was $80,000. How much do you think she still has left in premium?
Probably
75,000.
80,000. She's probably just paying freaking interest.
Tammy, what's your guess?
75. Okay.
So far in 10 years of making her payments to her student loan, she's paid $115,000 towards her student loan. Her principal balance is still at 71.5.
Yeah, I know that's pretty close.
Uh,
You know what? You do the same thing on
unbelievable.
your houses.
Yeah. Yep.
Mm-hmm.
Yep.
And there's a trick around it, and the trick around it is just doing biweekly payments, and you pay a fraction of the interest.
Yep.
Interest, right? Yep, exactly. No, I tweeted it, and I hope it doesn't come true. But I tweeted this like months ago. That student loan debt was going to be the cause of a substantial economic downturn, and I hope I'm wrong. I truly do, but I just think about it from the perspective of, for the last three some years, all of those people who should have been paying student loans, myself included, there were excess funds that were going into all different aspects of the economy, whether that was travel, going out to eat, going to party, I don't know, you name it, right? Maybe buying unnecessary shit that you don't need. And
Vacations.
now think about all those people who not only is your living payments still high because as much as CPI wants to tell you that inflation is down, I would disagree and say that a lot of the crap I'm still buying at the supermarket is pretty damn expensive in comparison to where it was. Gas, I got to admit, at least for the time being, knock on wood, but it's not too bad right now. But then you got your whether you're renting, whether you own a home or something like that, you have all those payments. Now you're adding on another with the student loan payments. So anybody who's really in the age range of what? I mean, 3 years ago, so what is it, like 24 to like 29, 30, people who were, or even older. I mean, there's people who are paying their student loans, they're 50 years old. So think about all those people who don't maybe not have the excess funds to continue doing what they were doing while also paying off their loan. I think that's going to be a problem. We already see it. I see an Unusual Whales tweet every day that credit card debt is at a new high. Seems like something's going to give sooner and later, but I guess for the time being, it's gonna keep on rolling. I don't know.
How many of these people trying to figure out trading so they can quit their job going to be happy they got a job whenever we do have a downturn?
Yeah, I don't know. I mean, I feel like there's been a lot of people who were trading or doing other stuff, and now they're back to work at this point. It's sad. It's sad to say, but I don't know. I think people are more in love with being a successful trader than actually like it actually happen, if that makes any sense. They love the idea. Yeah, I mean, they love the idea of this being something that they can do sustainably for the rest of their life, but then it comes time for it, and I'm not. I would never call anybody out specifically, but I see it all the time. Oh yeah, I'm doing much better now. I've been really good staying on my grind, and then you don't hear from them for like 3 weeks, and you're like, yo, what happened? Oh yeah, I fell off the wagon or something like that. It's like, you went back into your old ways, and it's like, well, I don't know, man. I haven't seen you in one live call. I know for a fact, you're not practicing your craft or anything like that. And yeah, you're right, Mando. You're right. Well, everybody talks the biggest game in the world, and then it comes time to actually show up and do something about it, and a lot of people are nowhere to be found. And, it just to me, I guess I shouldn't be annoyed by it, I guess you could say, but at the same time I am, because I'm sitting there talking to them for however long, and then the time comes and hey, you come into the live session that we scheduled last week. Oh no, man, I can't make it, sorry. All right, well, thanks for wasting my time and yours. Good luck. That kind of stuff really just gets me annoyed because it happens way more frequently than you would even imagine. But I don't know, man. I don't know. Sad state of affairs around here. But, sorry, Tim. I just saw your message right there. But what else? I got like 5 minutes till destination. Anybody else got any final thoughts? KD, Timmy, you got anything you want to add, or?
Just put in work. I think that's like the biggest thing is nobody wants to, or I think that people don't know how to put in work. But that's what I was saying was, everybody loves the idea of it, but nobody wants the 10,000 hours of screen time and back testing and pulling data and just being wrong and trying to figure out why.
Right.
Nobody likes that part.
No. I think people, when they're wrong, it's just, and there's just zero ownership for mistakes. And it's always, hey, who can I blame for this? Oh, I can blame the market for being manipulated, or I can blame so and so from Discord who gave me this call out and he sucks and I lost because of his call out. It's instead of just like kind of looking at it like, okay, I messed up here, I'm trying to work towards independence. I don't need to rely on anybody else. I think it is helpful to learn from someone who maybe got roughed up a little bit early on and they've kind of found their way. I think that's definitely beneficial. But to kind of rely on somebody else to make money, I always thought like the alerts and call outs were just mind-blowingly stupid. Um, you know, what happens when it doesn't go your way?
Have you ever
You
met a
blame the
millionaire that only takes call outs?
Nope, not I.
You know,
Nope,
I
that's
know.
true.
So one thing that I did whenever I was, learning was I listened to podcasts. And one thing that everybody says is that they had to quit taking call outs because it's
Yep,
not
yep, true.
sustainable.
Mm-mm, mm-mm. And the person you could be taking those call outs from could be an outstanding trader. Shows you proof of work, shows you the process of what he or she did in order to come to the conclusion to make said call out. But look, they might be going in it with a specific size, and maybe you hit 10 in a row using this one person's call outs, and then on the 11th you want to up the ante because you say, oh, this guy is amazing, he don't miss, he's gonna hit again here, and you go in with half your account, maybe even all of it, and then that's the loser right there. And while that trader is still living to see another day, uh, you're out of money. But Solity, I just brought you up here, man. What's going on? I'm adding you as a speaker right here. Okay, it says you can speak now, but it's also saying requested. This will be the last one. It's saying connected, and then it's saying requested. Huh. I don't know. Hold on.
You might
I'm gonna.
you might have to
I'm gonna
just
exit.
yeah.
What's that? Yeah, I'm gonna exit, and then I'm gonna manually invite you. So, okay. Solly, if you want to try again, I just sent you an invitation to speak. Oh, I think he or she is a goner. But Katie, you got any last thoughts? I know we've been all over the place here, but it's at least it's nice to talk about this stuff every now and then and kind of get away from listening to the same songs or the same podcasts about the world ending and stuff like that.
Yeah, I think the take home message is come up with a plan, back test it before you implement it, whether that's paper trading, uh, starting with a very 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 small amount of funds, testing it on a program, an electronic program software that you can buy. Make sure your strategy works, and don't consider working just like you're blowing the roof off with like you know $1,000 trade, $5,000 trade, $10,000 trade. Make sure that you have consistency in that strategy, and then figure out how to build a plan to build wealth off of that, whether that's consistently trading or buying something with whatever you are you're making your money with. I'm a lot more conservative than Mando is. I love Mando's buy the Mustang idea, but that's literally
Someday, it's happening.
yeah,
It's gonna happen.
someday. But I was like, please don't do that. With don't make that like the first thing that you do is like, hey, I'm taking $200,000 out so I can go buy a Porsche.
It's only 60.
Yeah. But you get the point. Is
No,
make sure that you set up your first your first withdrawals or your first big payout when you accumulate all the funds that you've made. Make sure it goes into something that lasts and something you want, and not something that's just gonna again, apologies, provide you with some temporary dopamine hit. provide something that is valuable and definitely will keep growing, or something that you worked for. And then with that second and third payout, then that's when you can start thinking about your vacation, and possibly buying a new car, but it's always that first one, you want to make sure that something that an asset that you can hold on to, and then have a plan, stick to it. I know I counted out, I have a calendar which says KD makes X amount of dollars every day, and then I have goals. I'm like, yo, I want to hit X amount of dollars 5 days from now. I want that to be 2x by you know a certain day. I want that to be 3x by the next day. Starts, it's really hard. A lot of people, they like to see like, oh, yo, I'm making $10,000 a year off my passive investments or whatever, or 20,000. But like, start small. Once you can see that number start to get bigger on the smaller end, then think about how big it actually is when you're zooming out to the macro end of things. And things take time. We all live on different schedules in life, and let your plan play out, man. Some people's plan might take 5 years, some people take 10, some people might be 15 or 20, but you'll get there. Just make sure consistency and making smart decisions is a part of it. And keep the other thing is keep reevaluating yourself after a month, 3 months, 2 months. Keep making sure that you resharpen that edge, so that you always stay razor sharp whenever you're trying to trade or making the investment, so that you can be the best person you need to be to focus.
Well said, man. All right. Well, I just got to where I got to be. So I'm going to cut it here. Thanks for everybody sticking around. Thanks for KD, Timmy popping up here, Rizzler as well, Nathan for his first question. But yeah, all right. Well, I got a bunch of charts and stuff coming out this weekend. So if you got any questions about any of that, feel free to reach out. But I'll catch everybody next time.